Have you ever walked into a dealership excited to buy your dream car, only to walk out feeling like you just got tricked into paying way more than you should? What if I told you there's a way to flip the script and get the absolute best? Loan rates that dealerships never want you to know about. Stick around, because what I'm about to reveal can literally save you thousands of dollars. And no, it's not something you'll hear from the guy in the suit with the fake smile. Number 1. Why your loan rate really matters. Let's get real. When you're buying a new car, most people only focus on the price tag. But what about the cost of the loan itself? Here's the secret. The interest rate you agree to can actually cost you more than the car itself if you're not careful. For example, imagine you're buying a car for $30,000. If you get a loan at 8% interest, over 5 years, you'll end up paying over $6,000 just in interest. But if you score a rate of 4%, your total interest drops to around $3,000. That's half the money saved, just by shopping smarter. Now you see why the rate matters, right? So let's dive into how to make sure you're getting the best one possible. Number 2, know your credit score before you shop. Here's the first mistake most beginners make. They walk into a dealership without even knowing their own credit score. That's like showing up to a poker game without looking at your cards. Your credit score is what lenders use to decide how risky you are. The higher your score, the lower your rate. For example, someone with a score above 750 might qualify for a loan at 3 or 4%, but someone below 600 could get stuck with rates as high as 12%. That's a huge difference. So, how do you find your score? Check it for free at websites like Credit Karma or through your bank's app. Once you know your number, you'll have a much better idea of what rates you actually deserve. Number 3, get pre-approved before you set foot on the lot. This is one of the smartest moves you can make, and almost nobody does it. Instead of letting the dealership find you a loan, go to your bank or credit union first. Tell them you're shopping for a new car and you want pre-approval. They'll run your credit and give you a rate you qualify for, usually good for 30 to 60 days. Here's an example. Let's say your bank pre-approves you for 4%. Now, when you're at the dealership, if they try to stick you with 7%, you can simply say no thanks. You already have better financing lined up. This not only saves you money, but it also gives you negotiating power because you're no longer dependent on the dealership's financing tricks. Number 4, shop around for the best rate. Don't assume the first rate you see is the best you can do. Banks, credit unions, and even online lenders all offer different rates. One viewer of mine recently told me she saved over $2,000 by simply calling 3 different lenders before choosing one. Here's a quick tip. Credit unions often have lower rates than big banks. Why? Because they're member-owned and not out to make huge profits. So take an afternoon to shop around, compare rates, and don't be afraid to ask each lender if they can beat a competitor's offer. Sometimes, just asking that question gets you a lower rate. Number 5, choose the shortest loan term you can afford. It's tempting to stretch your payments over 6 or even 7 years to lower your monthly bill. But here's the trap. The longer the loan, the more interest you pay in the end. For example, on a $25,000 loan at 6%, a 5-year loan costs you about $4,000 in interest. But stretch it to 7 years, and you'll pay almost $6,000. So whenever possible, aim for the shortest loan term you can afford. You'll pay off the car faster and save big on interest. Number 6, make a bigger down payment. Here's a golden rule. The more money you put down up front, the less you borrow. And the less you borrow, the less interest you pay. If you can save up even a couple $1,000s extra for your down payment, you can lower your loan amount and your monthly payment. For example, if you're buying a $30,000 car and you put down $6,000 instead of $3,000, your monthly payment could drop by around $50 to $60. That adds up to thousands saved over the life of the loan. Number 7, watch out for dealer add-ons and hidden fees. Here's where many beginners get burned. You negotiate a great price on the car and a solid loan rate, but then the dealer sneaks in fees and extras that drive your payment back up. Things like gap insurance, paint protection, or extended warranties often cost more than they're worth. For example, one man I coached discovered he was paying an extra $20 per month for something called tire and wheel protection that he didn't even want. Over 5 years, that's over $1,200 wasted. So read your loan documents carefully before you sign, and don't be afraid to say no to extras you don't need. Number 8. Time your purchase smartly. Here's a trick most people never think about. Timing. Car dealers are often desperate to hit sales quotas at the end of the month, quarter, or year. That means they're more likely to give you a better deal and even lower loan rates if you buy during those times. For example, shopping in late December or on the last day of the month can save you hundreds or even thousands of dollars. Plus, lenders sometimes run promotions during those times with lower interest rates for qualified buyers. So if you're not in a rush, plan your purchase around those key dates. Number 9. Understand the power of refinancing. Even if you already have a car loan at a high rate, all hope isn't lost. You can refinance later to get a better rate and save money. For example, if you took out a loan at 10% because your credit was bad, but a year later your score improves, you might qualify for a 5% loan. Refinancing then could save you thousands over the remaining life of your loan. So don't forget, just because you signed once doesn't mean you're stuck forever. Number 10. Check for special programs. Many lenders and manufacturers offer special programs for certain groups. These can include discounts or lower rates for military members, students, recent graduates, or even first-time buyers. For example, a recent college graduate program might knock a 0.5% off your interest rate if you show proof of graduation. That may not sound huge, but over 5 years, that small difference can save you a few $100s, so always ask your lender or dealer if you qualify for any special programs before signing anything. Number 11. Beware of 0% financing traps. You've probably seen those flashy ads. 0% APR financing for 72 months. Sounds like a dream, right? But here's what they don't tell you. Many times, you have to choose either the 0% rate or the big cash rebate. For example, a dealer might offer 0% APR or a $3,000 rebate. If you choose the 0%, you lose the rebate, and if you choose the rebate, you pay a slightly higher interest rate. Depending on the math, the rebate might actually save you more money in the long run. So before you jump at a 0% offer, grab a calculator and compare both options carefully. Number 12. Use online loan calculators. Here's a tool that can save you from making a big mistake. An online loan calculator. You just plug in the car price, down payment, loan term, and interest rate, and it shows you exactly how much your monthly payment will be and how much interest you'll pay in total. For example, if you're deciding between a 5-year loan at 4% and a 6-year loan at 6%, the calculator makes it crystal clear which one actually costs less over time. Websites like Bankrate or NerdWallet have easy-to-use calculators, and they're free, so use them before you sign anything. Number 13. Avoid being payment-focused. Here's a sneaky trick dealers use. They ask you how much you can afford to pay each month. Sounds harmless, right? But then they stretch out your loan to meet that monthly payment, and you end up paying way more overall. For example, if you tell them you want a $400 monthly payment, they might stretch your loan to 7 years instead of 5 just to hit that number. That means you're paying 2 extra years of interest. Instead of focusing only on the monthly payment, look at the total loan cost. Always ask, what is the total amount I'll pay over the life of this loan? That question alone can save you thousands. Number 14. Consider buying a slightly cheaper car. Sometimes the smartest way to get a better loan rate is to simply borrow less. If you're eyeing a $35,000 SUV, but you find a nearly identical model for $30,000, you instantly lower your loan amount. Smaller loan equals lower payments, and sometimes even better rates because you're borrowing less. One viewer told me he dropped down one trim level, saved $5,000, and shaved almost $50 off his monthly payment, without really sacrificing anything he needed. So don't be afraid to consider a car that's just a little more affordable. Number 15. Don't rush the process. This is a big one. The faster you feel pressured to buy, the more likely you are to make a costly mistake. Dealers love to create urgency. This deal is only good today, or we have another buyer interested in that car. But here's the reality. There's always another deal and another car. Take your time. Do your homework. Sleep on it if you need to. It's better to take an extra day or two than to lock yourself into a loan you'll regret for the next 5 years. Number 16. Double-check the fine print. Before you sign on the dotted line, read through the loan agreement carefully. Look for hidden fees, prepayment penalties, or clauses you don't understand. For example, Some loans charge you a fee if you pay off the loan early, which is the opposite of what you want. Make sure there's no prepayment penalty, so you can pay extra toward your principal whenever you want. If you're not sure what something means, ask. Or even better, take the paperwork home and review it without pressure. Number 17. Don't forget about insurance. Here's a sneaky extra cost. Your car loan might require you to carry full coverage insurance. So if you're stretching your budget to buy a car that's already pricey, make sure you can also afford the insurance premiums that come with it. For example, a brand new sports car might cost you an extra $100 per month in insurance. Compared to a regular sedan, that added cost can really stretch your budget. So before you commit, get an insurance quote on the car you want and factor that into your total monthly costs. Number 18. Build your credit before you buy. If you know you're buying a car in the next 6 months, start working on your credit now. Pay down credit cards, don't open new accounts, and pay every bill on time. Even a 30 or 40-point increase in your credit score can mean a huge difference in your interest rate. For example, going from a 640 to a 680 credit score could save you as much as $50 per month on your car loan. That adds up to thousands over time, just for being patient and improving your credit first. You've made it to the end, and now you know more than 90% of car buyers about how to get the best loan rates. So here's my question for you. What's the one strategy you're going to try first on your next car loan? Let me know in the comments. I'd love to hear how much you save.